Alright guys, welcome back. Today is day 2 of me trying to re-study every single thing about trading from scratch. And like I promised you guys in day 1, today I'm going back to the basics. So I just watched the very first video of basically the very first lesson of my trading course, and I'm taking notes, breaking everything down slowly. I don't want to skip any steps this time because the basics are really what really built the foundation for everything else. This is the part most people ignore, but for me it's about starting over properly, step by step, day by day. I'm rebuilding my trading from the ground up. It might look boring now, but this is the kind of work that creates real consistency in the long run. Today I want to dive into retail trading concepts before going into SMC, because I feel like that's better. So I'm going to keep every single thing simple as possible, because honestly trading can get really messy if you get every single thing in this trading, like basically SMC, retail, and all these other stuff together. It can get really messy, so it's better to start off with something simple, which is retail trading. Because I mean, like, what retail trading is for me, I feel like most people, those who actually start trading at first, they usually start with chart patterns, trend lines, and indicators, like all those. So I feel like retail trading is that, and there's nothing much to it. But here's the thing, like, retail trading on its own is not the most accurate way to get into trading, but you have to mix it with other stuff such as Fibonacci, Wyckoff, uh, Elliott wave, SMC, to get the to increase your accuracy, like getting into a trade. If not, retail it can be a bit tricky, right? So yeah, like, but to really master retail, you need time. Like, you need to practice for a very long time in order to like make it your second nature. Now let me say this: trading is tra- basically the transfer of money from an impatient and unskilled trader to a patient and skilled trader. That's it, right? I mean, I hope you get it, because as long as you stay patient and like you master the skill, you're gonna get that money. Like, that's how it is. That's how trading works, because it doesn't generate money. So it's basically, you put in money, and you're like, if you are actually 100% skilled, and if you are actually following something, you're going to get something out of it. If not, you're going to lose that entire account. So right now we are not trying to be the 99% of unskilled and impatient traders. We are trying to be the 1% of skilled and patient traders. So we are getting there slowly and gradually. So let's start from the basics. There are two types of trading. One is spot trading, and the second one is futures trading. So basically, the first one is where you actually buy and hold crypto, like you own it. Basically, like, you could buy one Ethereum or one BTC, like Bitcoin or whatever it is. Like, as long as you have a good capital, you could buy a coin, and you could hold it for some time. Let's say you buy it, buy a single. Let's get an example, right? Like, let's say there's a coin called ABC. So you buy that coin for, let's say, $1, and you keep it with you for some time, maybe a long time, maybe 1 year, 2 year, 3 years time, and gradually the price of that coin increases. It becomes $1,000. So you could, the coin you bought for $1, you could actually sell it for $1,000. That's how it is. That's how spot works. And futures, you don't actually own the coin, right? You could have some amount of cash in your account. You could use the leverage position and actually can speculate on the price going up and down. Like you don't have to have the entire amount to buy the coin, right? Like you could just buy a partial amount or the entire amount, entire coin. That it depends on the capital itself. So now I personally I only do futures trading, and the reason for that is I don't have a big capital right now. So maybe in the future I'll get into spot when I have a big capital, but right now I'm just doing futures. In futures, you can use leverage to open bigger positions than your actual account balance. But the danger is if the market moves against you, you lose more money than you'd think. That's the only downside of it. That's how you get liquidated, like blue accounts. Like I've been there myself. That's why I'm giving you this advice. Like you need to be extremely cautious when you're getting into futures, because I know it's like you are gonna gain a lot more money than spot trading. So that's like a lot of traders get into futures thinking that you're gonna make a lot more money than spot, and they actually eventually they lose every single thing they have in the account. So we are not gonna do that. So I mean, it's not fun, right? It's not fun. So you need to respect risk. You need to have the better risk management. And now let's talk about chart patterns. There are two main categories. The first one is reversal patterns, and the second one is continuation patterns. I mean, I don't have to explain much about it because it's the names kind of explain themselves. But I'll show you some examples on charts while I explain. For reversal, basically there are patterns such as double top, double bottom, head and shoulders. And for continuations, there's like think of flags, right? Like flags, bull flags and bearish flags and all that. And I feel like it's better to show you guys what all these chart patterns are. And there you go. These are the chart patterns I was talking about. One is reversal and the other ones are continuation patterns. So reversals mean they basically, let's say there's a uptrend, right? If by any chance they make this, let's say it's a bearish double top, and right now the pattern is an uptrend, right? So this uptrend, if by any chance they say they make the double top, and at the end of this it's going to change, it's going to become bearish, and just like that. And there's this head and shoulders, this is also bearish. I mean, this can happen both ways. This is an uptrend going up, and if it makes a double top, it's going to become bearish. And if by any chance it was a bearish movement and it makes a double top, it's going to be an uptrend, just like that. If it's a head and shoulders pattern, and if it was starting with an uptrend, it's going to become a downtrend at the end of it. And if it was a downtrend at the beginning, it's going to become an uptrend, just like that. These are the same, these are actually the same. So if it comes up at the end of it goes down. So basically it reverse. That's what this means, reversal patterns. And there you go. And there's the continuation patterns. Let's say if by any chance the pattern is an uptrend, if they are making a bullish flag pattern, and if it is already bullish, so at the end of the pattern, and if it breaks this trend line, it's going to be bullish as well. And it can happen the other way around as well. So this is bearish, it was bearish before, and it by the end of it, by breaking this trend line, it becomes bearish as well, just like that. These are continuation patterns. So basically continuation means it continues the previous uptrend or the downtrend. There's nothing much to it. These are very simple. It's just that you need to be extremely careful when you're drawing these trend lines, because there can be fake outs. That's what we have to be very, very extremely careful of. of these breakout fake outs. Because if by any chance we think somewhere over here, it's definitely going to go down from here, and if by any chance it becomes a fake out, it's definitely going to hunt this high. Or if it was a if it was a downtrend, if there was a fake out somewhere here, it's definitely going to hunt this low. That's how it is. So let's get into the charts, and I'll show you a live chart pattern. There you go. Let's get a 4, and there you go. This is what I saw earlier, and this is actually a head and shoulders pattern. Like, you need to actually see these patterns. If not, you do not, like, you can't actually get into a trade if you don't see these patterns. Like, when you look at it, at first you can't actually see anything, right? Now look at it, you can't actually see anything. You need to draw this trend line in order to see that there's actually a pattern right over here. So right now we could call this as head and shoulders, because there are two shoulders, and there you, this is the head. So when this happens, you, like, it's definitely 100% sure that it's going to reverse, just like that. Let me show you in the pattern. There you go. This is a bearish head and shoulders pattern. So it started as an uptrend. By the end of it, it became a downtrend, just like that. In the very beginning, it was an uptrend, right? And when you break this trend line, it became a downtrend. So that's how it is. And another one, let me show you. Okay, now I showed you a reversal. I showed you a reversal example, like in a live trade. The trade was actually XRP, and let me show you a continuation pattern. I'll show you a bullish flag pattern, which has actually not yet broken the main trend line. There you go. Now you need to actually go to a higher time frame in order to see this. There you go. This is the bottom trend line, basically the support, and this is the resistance. Now I don't know where, like, when this will break this trend line. It might take some time, because this is actually, we are in the daily time frame. So it could do this, and it breaks. It's definitely going to go up, because this is actually a bullish flag pattern. So there you go. There's a example for bullish flag patterns. Just bear with me. I'm going to show you every single pattern, and I'm going to give you all those examples as well. This is the day 2. Even though it's the second day, this is actually the first day we are getting into trading. So yeah, these patterns don't actually guarantee anything. It just gives you a slight idea where the market's gonna go, and like, all it gives you is the slight idea. Like, you need to be extremely cautious. I mean, there are stuff that you could imply afterwards to get an actual entry in. Let me get into that now. So there are things called indicators. Let's move on to indicators. Now there are hundreds of indicators out there, but I want to focus on few that are commonly used in retail trading. The first one is EMA. It's called exponential moving average, and the second one is MACD. The third one is stock RSI. Fourth one is just RSI, and the fifth one is EMA ribbon. So I don't usually use all those. I only use two. So I'll show you guys in the future. Like I don't want to get into like all right now and just waste your time, because like I said, there are hundreds of indicators, but if you don't apply it properly, none of these will actually make you money. We are in this to make ourselves some extra cash. It's not going to happen with these. I mean, it will help you, but you can't guarantee it. So let's take an example, and I'll explain a bit about EMA. One of those or the most well-known EMA concepts is the golden cross and the death cross. So basically, golden cross means the market eventually becomes extremely bullish, and the death cross which means is the market actually becomes extremely bearish. So there's nothing much to it. Like I've seen other people who post about these trading stuff, post on Twitter and like all those platforms, that BTC has shown a death cross and maybe like a golden cross. Like that's what it means. And as you guys can see, I've let's delete all the indicators I have right now. Okay, and then we'll use the EMA. So right now it's in this default settings. Let me change it. Okay, so right now let me increase its. Okay, there you go. This is the settings you need to use, and there you go. So right now this, when you look closer, this is actually BTC. When you look closer, this is called a golden cross. There you go. The golden cross becomes, which means this yellow line gets on top. That's why it's called a golden cross. And when that happens, the market becomes extremely bullish. There you go. After this cross, this is actually in the weekly time frame. Like I said, weekly is the best. Just look how much it pumped from that cross itself. It's still pumping. It's still pumping. It started from here. It has gone up for 391%. It's still going up. We're talking about BTC here. And then let me talk about this is called the golden cross. And then let me talk about the death cross. Death cross is where the red line comes on top. This, as you can see, that's the death cross. And when that happens, when the red line actually comes on top, the market becomes extremely bearish. There you go. The market has gone from here to this level. It has gone down 63%. So yeah, I hope you guys got an idea about the EMA and all the golden cross and the death cross. And we'll get to the other stuff later. Like you just get it into your head for now. It does not, like for me, like the way I trade, it does not actually affect me what indicator I use, because I solely depend on retail plus SMC. I mean, for you it might change. For you, I mean, you might depend on indicators, but like you do, like I'm gonna tell you what I do, right? Okay, so basically EMA works better. I mean, what I feel like it works better on a weekly time frame, because it's actually very powerful in weekly time frame when it gives a death cross or like a golden cross. And because in a shorter time frame, it just like it gives many golden crosses and many death crosses, so like you can't actually keep up with it. Like in a weekly time frame, it takes time to make a cross, so like you have actually time to brace yourself for an entry. And yeah, now let's talk about trend lines. And drawing trend lines on smaller time frames like the 1 minute or the 5 minute chart will give you a lot of fake outs. Like I said earlier, fake outs, you have to be extremely careful of those. If not, like I've lost shit ton of money because of fake outs. I started when I started trading, I actually tried to get in on 5 minutes, 15 minutes, which I actually lost a lot of money. So eventually I moved on to 1 hour time frame. That's like there, like I said, 5 minute charts and like all those smaller time frames will give you a lot of fake outs. That's when price breaks out but then quickly reverse, right? So and trust me, like fake outs can drain your account very fast, because you once it actually breaks out, like let's say it gives a bullish movement, but in that same minute it reverse, you just hold your position thinking that it's going to go up high, it's fine, I'm going to hold on for a few minutes, but it doesn't. It does not happen like that. That's why higher time frames are more reliable. The higher the time frame, the lower the risk of losing money, because the signals are actually stronger. Personally, like I said, I like to train on the 1 hour time frame and higher. Basically, I do 1 hour time frame, 4 hours, and daily. Like once in a while, weekly. For me, it gives a good balance between accuracy and not waiting forever for setups. Okay, so then now I want to show you something a little different. Okay, there's this website called uh, colintalkscrypto.com, and it has a tool called a CBBI, which is the crypto Bitcoin bull run index. So basically, it gives you a confidence level shown as a 2 digit number that tells you how overheated or undervalued the market is. Okay, so right now, for an example, I'll show you guys later. So basically, that means, I mean, let's say if it's a higher number, it starts from 0 and it goes to 100. So let's say if it's a number closer to 100, that means Bitcoin has actually gone to its peak. Like there's no, it's not going to go up further. Okay, let's say it's 99 or 90 or something like that. That means it's not going to go up further, so it's gonna go down from there itself. But if by any chance, let's say it's somewhere around 35 or like anything below 70 or 80, something like that, there's potential of it going up further. Okay, and I hope you get what I said. Okay, and let me show you the actual site. Okay guys, so this is the site I was talking about earlier, and right now the confidence level is 73, which means there's actually a bit more potential of Bitcoin going up for a little bit higher. And let me go down, and there you in 2013 the confidence level was at 99%, and Bitcoin topped about 1183. So that was the actual top of BTC, and then there onwards it actually went down. And there you go, there was in 2017 again the confidence level was 99, which actually Bitcoin went up to $15,027, and then it went down like that. in 2021 the confidence level was at 95. Bitcoin went to 54,900 something, and there you go. For today it's at 74, and BTC is at 113,501. So like I said, there's still potential of BTC going up a little bit, maybe like towards 200k. So yeah, there's still hope. There's still hope, guys. So that's basically the introduction of retail concepts. We covered what retail trading was, and we talked about spot trading and futures trading, and then we talked about reversal and continuation patterns, and then we talked about EMA basics, including the golden cross and the dead cross, and we talked about trend lines and time frames, and then even the CBBI tool. Okay, so this is just the beginning. Tomorrow I'll dive in deeper, even deeper than this, and then eventually we'll move into SMC, which is what I really want to master. So basically, like I told you guys, like this is not me teaching you guys. I did manage to watch all the videos, like the first video of the course. Like I actually built a few pointers, and this is what I'm following. And so yeah, like, so if you're like following along my journey, hit that like button, subscribe, and stick around, because this is just day two, right? This is just day two. Like if there's anything you did not understand, just comment below. I will get into it, and we will get through this together, because I'm also starting from the just beginning level. So yeah, we've got a long way to go, and we're gonna do it together. All right, so that's it for today. Thanks for watching. I'll see you tomorrow with additional information about trading, and yeah, let's keep learning and keep building together. And by the end of this study arc, will actually be better than before, and we'll have to focus on the goal, which is me trying to flip $10 into 1,500, and no matter how long it will take, we'll try our best to be in that 1% of skilled traders. All right, peace out.